Jaisinghani, CMD, and Gandharv Tongia, the MD and CFO at Polycab, joining in on the show right now. Gandharv, if I could start off with you, you've reported a good set of numbers this time around and the best ever first quarter of revenue, EBITDA, as well as PAT. Tell me, what were the levers that actually led to this kind of momentum, and whether it's going to continue to, stay put or not, and are you going to be revising your full-year revenue target?
In the history of the company, we achieved close to 6,000 crore rupees of top line and close to 600 crore rupees of bottom line. This was possible because of the efforts which we have made over the years under Project Leap earlier and under Project Spring now. In addition to internal initiatives, the government capex as well as private capex has helped us in achieving these numbers. As you know, in the case of government capex, since last 6 months or so, there is a activism, and that is how the numbers are improving. Even there are green shoots which are available or visible in private capex. So both internal and external factors helped us in achieving these numbers. As far as guidance for the year is concerned, you are aware we don't give annual guidance. However, we unveiled our 5-year vision, which is Project Spring, between 26 to 2030, and within which we believe we will continue to grow at a rate which is going to be significantly better than the industry growth rate. And because of that, we should be able to increase our market share in years to come.
Inder, could you also share some more details on the recent order from BSNL Batnet program?
Batnet program, which we got it, we already started, and we are first stage, and our offices, staff, everything at all state is ready now. So we already start the work, and it is going to go good, at least, which we have to complete mile-wise. We will do that properly.
Right. And Gandharv, what about the company EPC segment that's registered a degrowth in this quarter? What has led to this degrowth, and what will be your outlook on this segment going ahead?
So as you know, EPC is an extension of our cable and wire business. We do power cable EPC contracts as well as optical fiber cable contract, which is what Inder was alluding to while mentioning about BSNL project. Over mid to long term, we believe EPC would contribute between 5% to 10% of our top line, with the high single-digit EBIT margin, and the current quarter performance is in line with the guidance which I just mentioned.
But Inder, does the tariff from US will hurt the company's international business, and what is the company's exposure to USA, if we can give us some sense there?
Our total now is export to US is around about 5%, and which we are going to do more, but looking to not tariff is disturbing local also, because suddenly they are increasing duty, raw materials going up, and volatile too much. So that is basically even raw material in India also is disturbed. But future, I think so, he will be get it clear within 1 or 2 months, because they also have to keep a good relation with India.
Right. And Mr. Inder, what is your outlook on the raw materials? Copper prices are rising, and pardon me, Trump has imposed a 50% tariff on copper as well. How is this going to impact your business and the overall industry sentiment?
In the overall industry, there is a little shortage of the copper because of that reason. But I think so this is hardly, it is 1 or 2 months. Within 2 months, it will be clear, because nobody can go continue in high prices and showing a shortage. That is basically looking only for to show that we are very strong, we are going to put up more tariffs, so everybody should come to the, and whatever they want to get it done. But I think so it will be clear within 2 months, so there won't be permanent shortage. No doubt, today the shortage is there, but we are managing anyhow.
All right, and lastly, Gandharv, your FMEG segment is performing very well, and the EBIT remains positive for the second quarter itself. How long do you think the growth is sustainable?
So FMEG is a very important business, and we are structurally very positive on this particular sector. Over the period, we have improved both the top line and bottom line of FMEG. We have taken several strategic initiatives, and the result of that is what is visible in the current quarter performance. Under 2030 Project Spring guidance, we had explained that we aim to achieve a 2x of industry growth rate in FMEG with the over the period improvement in EBITDA margin, and probably we should be able to get to 10% of EBITDA margin between now and 2030. The way to think about FMEG is it's going to be an improvement journey for us from now to 2030, both in terms of top line as well as bottom line. And as I was alluding a while back, the composition of FMEG will probably start moving internally towards more profitable business with contribution coming from premium category. The other important thing what we are trying to do under Project Spring is CapEx. We have already invested 400 crore rupees in the first quarter. And this year we should be able to do anywhere between 1200 to 1600 crore rupees in line with the Project Spring guidance. Despite that, our ROCE continues to be in a improvement journey, and recent ROCE is around return on capital employed is around 32%.
Okay, well, thank you so much for joining us and giving us your view on where the company is headed and what we can expect in the quarters to come. That was the management of Polycab.